we have something different for you in this episode. It's all about battery metals, especially those used in electric vehicles. Namaste. Cobalt, lithium and nickel are key raw materials for EV batteries. This year, lithium prices have declined by 38%, while nickel prices have risen by 2% and cobalt has surged over 38%. So, what's the outlook for these metals? Let's start with cobalt. Prices have surged by 50% since late February, largely due to a 4-month export ban by the Democratic Republic of Congo or DRC, aimed at addressing a global oversupply. Demand for cobalt is expected to keep growing, driven by its use in lithium-ion batteries for EVs and other technologies. We would urge you to check our 40th episode for more on cobalt. However, two key factors create uncertainty about whether this price trend will continue. 1. Declining EV sales in China could reduce cobalt demand. 2. The impact of DRC's export ban may be short-lived, especially as Chinese smelters in Indonesia ramp up production. Projections suggest a market surplus until 2030, which could limit long-term price growth. Let's look at nickel. Nickel prices have rebounded from a 4-year low after Indonesia imposed export restrictions. This is because of concerns over oversupply. The Indonesian government has cut nickel mining quotas by 120 million tons in 2025, potentially reducing global supply by 35%. This follows a production increase driven by Chinese smelting projects in Indonesia after the 2020 ban on nickel ore exports. Still, two challenges remain. 1. LME stocks have doubled to 200,000 tons year on year, indicating a persistent glut. 2. US-China trade tensions could dampen global manufacturing demand. According to the World Bank Commodities Outlook, nickel prices are expected to fall by 6% year on year in 2025. The Australian Office of the Chief Economist forecasts an average price of around $16,000 per ton in 2025, with prices hovering near $17,000 in real terms over the next few years. Let's look at lithium now. Lithium, a vital battery material, is currently trading at a 4-year low, below 65,000 Chinese yuan per ton. Data from Australia's Office of the Chief Economist show a slowdown in new energy vehicle sales in China and a drop in exports despite government subsidies. The EV market in China hasn't grown as fast as expected after the early decade boom. Subsidies led to a production surge and a supply glut. As a result, battery inventories remain high and EV makers are in no rush to sign new supply deals. Meanwhile, lithium miners are reluctant to scale back operations, aiming to maintain market share and relationship with government and battery producers. The Australian Office of the Chief Economist expects a modest price recovery through 2028, driven by production cuts and renewed demand. However, prices will likely stay well below the peaks of 2022 and early 2023. The World Bank also notes that despite recent price increases due to trade restrictions, prices for critical minerals are expected to remain well below 2022 in the near term. In conclusion, all of this suggests that the prices of EV battery metal are likely to remain under control over the next few months. That's for now. Keep smiling and stay happy. Until we meet in our next episode, this is Subramani Mancombu signing off. Good luck.